Hi everybody, Russell here. Very interesting stock we're going to cover today, Dusk Group. It's been one of our top fundamental and technical stocks for quite some time over the last couple of months. So the way I go and find our top fundamental and technical stocks, I click on Viewers and then I click on Stock Viewer. So if you're clicking on it for the first time, you'll be greeted by the home layout, and then over here, for example, I can click on Stock Viewer, or if I wish, I can click here, whichever one you prefer. Stock Viewer. And there it is, it fires it up. I'm showing the top 10. And you can see here, Dusk Group is the #1 ranked VST stock, value, safety, and timing. So the best combinations of fundamentals and technicals as of the 20th of April 2021. If I have a look over here, I can see the VST scores are very impressive 1.56 on a scale of 0 to 2. Anything above 1.4, 1.4 or higher, it is an excellent combination of fundamentals and technicals. If I drill into the components here, relative value, RV, it's looking at long-term upside potential on a scale of 0 to 2. A 1.67 score is excellent, so it's got excellent long-term upside potential. Relative safety on a scale of 0 to 2, above 1 is good. 1.06 is not bad, but you can see here, for example, Min Resources at 1.36, or this one here, ADH, ticker code 1.2, Codan 1.37. Right, so they've got better financials on average. But still, having said that, it's a pretty young company in the fact that it's only recently been listed, so it's got some work to do to build up a track record. So it's a good start, but we just need to be aware of that. It hasn't got the 5-year track record. And what's lighting up at the moment are the technicals, relative timing. So RT, relative timing, it's on a scale of 0 to 2. And you can see here that the technicals, based on the score, we can graph it and have a look, but the technicals are really firing this company up massively at the moment. That gives it a very solid VST score there of 1.56. And also, for the time period from which the graph exists at the moment, it's got a very smooth left-to-right price pattern as dictated by the Comfort Index, a whopping 1.89 on a scale of 0 to 2. So it's got a very smooth left-to-right price pattern currently. So you just make sure you've selected the stock, and what you can do here, you can click on graph selected, and what I've done here is I've turned on earnings and RT. So the graph layout here, I've got a Vector SA simple layout, and I've just turned off the stop. I've kept the short-term price momentum and the earnings. So you can see here price momentum, it's been above 1 and holding above 1 for quite some time. So a very good set of technicals at the moment. And the earnings, you can see they're slowly staircasing up and up and up, which is good. But notice this, 5 months and 8 days. So not quite that 5-year track record which Dr. Toledo refers to per stock strategies and common sense. I'll show you where to find that shortly. The other thing I want to put on here is the earnings growth rate. So add parameter, capital appreciation, hover over capital appreciation, and there it is, GRT. And if I put that on, there it is, a whopping 35%. Look at that earnings growth rate, and it's continuing to power up. So a very good growth story for now. But the warning there is be careful. You haven't got a lot of track record behind it. 5 months, 8 days currently as of time recording here. Well, let's do this. Let's click on the Welcome tab. Okay, so on the Welcome tab here we go. Download stock strategies and common sense. So I'll fire this up and bring it across. And what I've done, just to speed things up, I've moved to page 32. So page 32, once you've downloaded the book there, it's a PDF version here. So I've opened up the PDF, and you'll see this is per the chapter here. If I scroll up, chapter 7, stock safety, the missing link. And on page 32, Dr. Toledo talks about longevity. It's better to deal with the devil you know than with the one you don't. All other factors being equal, there's less risk in dealing with a company with a long track record than one which is brand new. So Dusk Group here is pretty much brand new, right? And then this is the quote that I put in the weekly essay, very important here. All right, young companies offer some of the best investment opportunities, but they also bear potential pitfalls that could be fatal. Regardless of how good a stock looks, it's risky if it hasn't been traded for at least 5 years. All right, so there it is, chapter number 7. You might want to read that chapter to brush up your knowledge if you're lacking on relative safety and all the factors that go into relative safety. And you'll see here, if I then go back to viewers here, relative safety is not the strongest it could be. And for good reason. This company has not been around a long time, so it hasn't got exactly, a 5+ year track record of financial excellence. But nonetheless, this is an exciting new company. It's making its mark. Interesting business that it's in. This will be one that I'll be keeping my eye closely on. Just one last thing there. I also mentioned the weekly essay, the 1% rule. So I don't want to risk more than 1% of my total investable capital per trade if I'm cherry picking. If I'm following given model portfolios or my given portfolios that I've set up per backtester, all right, that's different. You've got your trading plan in place. So for example, if you set up a trading plan and you're happy with this is one you're going to follow and you convert it over to portfolios and you're then tracking it on a given day. So if I go to my portfolios and have a look at, let's say, the Dividend Aristocrats, well, for me, then I'm following this portfolio exactly as is per my rule sets. But if you're cherry picking, you're thinking, well, I'll just add a couple of stocks here or there in my given trading account. I'm going to do a bit of trading, and then the 1% rule for myself applies. Don't risk more than 1% of your total investable capital per trade. So, for example, if I've got $100,000, I don't want to lose more than 1%, which is $1,000. So if I put $10,000 of my $100,000 into Dusk Group, then I'd need a 10% stop loss. So 10% of $10,000 is $1,000. That's what I could potentially lose. $1,000 of $100,000 is 1%. And as I went on to note in the weekly essay there, I note, well, some of you might be saying, well, 10% is a bit narrow. It's a bit too tight. What about a 20% stop loss? Do your maths again, right? So, what is 20% of X? That equals no more than $1,000. So you just solve that backwards, and effectively it would be $5,000. 20% of $5,000 is $1,000. $1,000 is 1% of 100,000. So you would then not risk more than $5,000 of your hard-earned dollars, $5,000 into Dusk Group of your $100,000 that you're looking to invest into the share market. Because if you then triggered at 20%, you haven't lost more than 1% of your total investable capital. All right, so if you need a refresh on how to do that, the team do a great job per the training video here, and it's lesson number 2, weed your portfolio. All right, it's towards the end of that video, so if you need a refresh on that, that's where you find it. Okay, so coming back to the graphs here, let's put in Dusk Group. Let's put that in again. There it is. DSK is the ticker code. And here it is. Interesting too, look at the value. I like seeing this too. I like seeing nicely undervalued companies. So this company looks like it's got a lot of upside potential yet, but be careful. It hasn't got a lot of track record behind it. So if something goes wrong, as Dr. Lido notes, for the younger companies, sometimes when things go wrong, the outcome can be catastrophic. So a young company with not a lot behind it, it's relying on 2 or 3 key business ventures, and if they don't come off, this company could suffer severe financial loss. You're better off to deal with companies with a 5-year track record. So, for example, like Apple, Microsoft, Fortescue Metals in Australia, a few other companies like that, where they've got a long track record, and then if something doesn't work out, they've got plenty behind them to live to fight another day. Whereas young, up-and-coming companies, they can't really afford to slip up too much in early days because they haven't really got too much behind them. All right, so I watch with interest with DSK, certainly right up there. It's performing well for a young, up-and-coming company. Let's keep our eyes peeled on it to see how it plays out. Until next week, hope you enjoyed it. Bye for now.